Now, what's going on with all the retail trader investor type stocks, right? These are just getting obliterated. HIM's down 22+%. I mean, that stock's fallen like 40% in just like, what is it, a week or two? Like, I remember looking at HIM stock, I want to say it was like a week or two ago, and HIM stock was $70+ a share, and it's 39 here today. Oh my gosh. MicroStrategy has lost half of its value like that, right? Tesla, we spoke about that one's down 37% since December 18th. AppLovin continues to get wrecked day after day, down another 8% here today. Hood continues to get hooded, down another 8% here today. Coinbase continues to get hammered. Oh my gosh, another 6.5% for Coinbase. Palantir, today was gentle on Palantir. It was down only 3% here today, right? But that's painful when you think about that stock was 125 just, last week? Like, that's a pretty dramatic fall, right? Now, if you watch my video on the main channel, Financial Education, right, last night, the 39-minute beast video I put out there, there's a lot of things I spoke about there, right? A lot of things I spoke about. But one of the things I showed you guys was margin levels, right? Margin levels have gone insane. Like, there's no other way to put it. In January, we hit all-time high in regards to margin. Now, I don't think this is a market, the type of market we should be hitting all-time highs in regards to people on margin, right? That's just people being extremely greedy in a market that has been in a bull market for 2+ years, and they deserve to get smacked. That's ridiculous. Like, you don't, first off, always stay away from margin regardless of the market. But you extra stay away from margin when you've been in a 2+ year bull cycle, a nearly 2.5-year bull cycle, when margin rates are, a lot of people are having to pay 8 to 12% on margin, which means you need to get 8 to 12% return just to pay off the interest on the margin loan, right? It's ridiculous. Like, in S&P at all-time highs, NASDAQ at all-time highs here recently, and the fact that people went all-time highs in margin, it just proves the point that people are just speculative gamblers and no clue what they're actually doing in the market. And it's so disappointing. And I told you guys this was all going to play out. If you follow me on the reaction channel here and the main channel, what did I tell you guys? I did a video 3 or 4 weeks ago on the main channel talking about how they're setting everybody up, right? Everybody's getting set up for this. I gave a major warning to all stock market investors. I think the video was called something like that. My warning to all stock market investors, something like that, right? I think about 144,000 people got to see that video, somewhere around there, right? I laid it all out. And then what do we see happen? Only a short few weeks later, it's all playing out right in front of us, right? And so what you're seeing with those stocks, you got to understand, is margin calls left and right. Because a lot of these retail crowd that, said, I got $10,000 to my name, but I'm going to do another $10,000 on margin, right? Margin calls left and right, right? And the margin in these stocks that are at sky-high valuations, and I've spoken about these time and time again, including even my own companies, like Tesla and Palantir, right? I've talked about this time and time again. The stocks are trading stupid valuations, and yet people will still margin out. It's pure greed. It's pure greed and incompetence, right? And the price has to be paid for that. And people are paying the price now. And so you're going through a whole margin call situation, right? And so many times the most violent move down in regards to that is in that first market breaking momentum, right? That first move is a lot of times the most painful. And that's why you see a lot of these stocks down 20, 30, 40, 50% like that, like in a very quick amount of time. Now, my opinion is, a lot of those stocks probably form a short-term bottom as early as this week or next week. And then some of them will start to come back. They'll start to come back a bit, right? As soon as they bottom, like I said, probably in this next week or two. And then they'll probably shake around for a bit, maybe start coming back to life, give everybody hope that, oh, these stocks are back, right? They're back, woo! And then they'll be let down a little later on this year probably. But that's the moral of the story in regards to that whole situation. It's ridiculous. And this is a market being the market, right? It's the market being the market, and this is what has to happen. And, can't say I didn't tell you so. I told you guys this is going to play out, so it's what plays out, right? Now, Tesla. I think it's fair to talk about Tesla. What's going on with Tesla specifically, man? This is ugly. This is really ugly in regards to Tesla. I'm not just talking about the stock price move, because it honestly should be worse than this. The stock should be down over 50% right now. This is a disaster, guys. Look at this, okay? Tesla sales in January bucked European electric car sales trends, which grew more than a third in the month. So electric car sales weren't bad in Europe, but Tesla sales were crap. Instead, Tesla sales across the EU and the UK fell more than 45% and 50% in the EU. Oh my gosh. Tesla's in deep problems, guys. And the stock is still not actually reflecting the deep problems. And as a shareholder of this company and as somebody that made ridiculous amounts of money on the stock, I'm here to tell you the company's actually in like big problems. And like, I'm not sure the easiest way out of this, but this is like big. This is like, you know, we can't just like look the way and be like, no, this is all fine. No. Sales are falling off a cliff in regards to Tesla, right? Here's the issue. And I've laid this issue out many times in regards to Tesla, right? Liberals are now have started to really go anti-Tesla because of how far Elon's gone. Like Elon, the first move he made was obviously the move with X, and then obviously attaching himself to Trump, which clearly we know Trump is probably the most hated figure, for liberals out of the Republican Party, maybe ever, but certainly in modern times, right? He is a despised individual from the Democratic side. So attaching yourself to Trump and the policies and all those sorts of things, whoo, boy, there's going to be hell to pay for that. And we're starting to see that. So liberals have really started to go anti-Tesla, right? And they really feel like Tesla's not standing for anything anymore. Because essentially, like what got a lot of people, like, a lot of Democrats, liberals, a lot of Californians excited about Tesla was the mission Tesla was behind, right? Going to sustainable energy, fighting climate change, all those sorts of things, right? That was the whole deal. Well, now people feel like Elon is not even about those policies. I think a lot of liberals believe Elon doesn't actually care about climate change. He doesn't actually care about sustainable energy or any of that stuff. It was just a way for him to make a lot of money. And so liberals have started to go really anti-Tesla, and I see it time and time again, right? And I remember, like, there's even people have stickers out there on their Teslas that says, I bought this before Elon went crazy. Like, that's the sort of environment we're in. Republicans have never really cared about EVs, and they still don't, just to be quite frank, right? Europeans have now started to go very anti-Tesla, and it's in the numbers, right? It's in the numbers. And then China doesn't like Trump, and Trump's right-hand man is Elon. Like, I don't know how well that's going to bode. So it's just, Elon's decided to go the way he's gone, obviously. And, as I laid it out, I told you guys this is all going to happen. Did I not? Right? Like, it is what it is. But there's a price to pay for that. There's a price to pay, and it's a big, big price. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. All right, let's get going.
Our next guest says that Nvidia, Tesla, and Palantir have showed the most net buying of active stocks on his platform. Favors some low volatility, high dividend names here. Steve Sosnick's with us, Interactive Brokers chief strategist, joins us here at Post 9. It's a good day to have you.
Good to see you.
Thanks for coming in. Talk about why those names in particular are moving.
we're still having this little battle between, what I'm going to call FOMO, MOMO, and NOMO. Basically, there's still this fear of missing out. We see here just the SPUs have bounced like 40 points since I've just been walked from there to here. And so people really don't want to miss what they see as a buying opportunity, because for the better part of the last few years, every dip has been a buying opportunity. This one, not so much. And I think a lot of what we see are active traders sort of wedded to that strategy, hoping this will pan out. And, and those moments where it does pan out, we see, people jumping right back in.
Right. So there's no...
Yeah, you got to let things play out. And I don't agree with the stocks are piling into here. I got to be honest with you guys. And that comes from somebody that's a Palantir and a Tesla shareholder, right? Tesla, I think, is still very dangerous. If Tesla went down to $100, I wouldn't be surprised with how bad their numbers are and how bad their numbers are going to continue to be. And full self-driving and all that stuff, that keeps getting pushed out. So, as a Tesla owner that owns 2 Teslas and has owned many Teslas, we still got work to do. So that's not happening anytime soon. That's a whole push out there. So Tesla's just in a tough place, really tough place, and I don't see that changing in the short term. Palantir's numbers are phenomenal. Their numbers should continue to be phenomenal, but there's starting to be some real weakness around Doge, cutting of spending from the federal side, and so that's going to be an overhang on Palantir, and that's going to keep a lid on Palantir's valuation. So you're not getting that great of pricing on Palantir here either, just to be quite frank. Palantir, if Palantir was cut in half, if Palantir was $40, I would say, yeah, I like pricing here. 80, you're still not getting good pricing. Obviously, it's much better to buy at 80 than it was to buy at 125 like it was a few weeks ago, right? But it's still not great pricing. I got to be honest with you guys. It's not even good pricing on Palantir. I don't even think it's average pricing. I think this is still not priced very well. Nvidia has a big cap on that stock right now, just because of the mere fact that people are very concerned about AI spend, in 2026, 2027. Everybody knows this is going to be another great year for AI spend, but, people are already starting to think about next year, the year after. And, Nvidia is just, they have to continue to beat numbers. If they don't beat numbers. So, I don't love any of those 3 stocks. Am I out there buying any of those 3 stocks right now? Nope. None of those 3 interest me. And so I just think people are piling into the wrong positions right now. They are. And it's in my best interest that everybody piles into Tesla and Palantir since I'm a shareholder, but I don't think they're going to do great. Nvidia, I think there could be money to be made in Nvidia over the next couple of years here, but I can tell you there's still a lot of risk there with margins likely coming down over the next few years, and AMD is just a way better opportunity, and people are going to see that. People will see that over the next 2 or 3 years. AMD's returns will blow away NVIDIA, and it's not going to be close in my opinion. Not even remotely close. Kind of like NVIDIA blew away AMD for 2 or 3 years there, right? And so that's all going to play out. Just wait on it. Time will tell.
A retail buyer strike combined with a hedge fund momentum unwind, is that a fair framing at the moment?
To some extent, I would say our customers really range the gamut from small investors to large investors, and very heavily, the numbers I'm seeing are very heavily weighted toward active traders, because if I'm looking at activity numbers, it's going to be the most active customers. Those, one of my friends at the SIBO calls it pro-tail, because they're sort of retail, but a bit more.
So what are they doing with tech, the heavily owned Mag 7 stocks?
As of the last time I checked the numbers this morning, they were still buying. Nvidia remains the most actively traded and the most actively bought stock on our platform, Tesla being number 2. These stocks brought them to the dance, and they're not abandoning them.
Was Friday a good example of that too? What do you think happened there Friday? Or was it about month end, something else?
I think Friday was month end. I think that close was for lack of a better word, phony as can be. But it shows you how the market, as soon as there's a buyable dip.
That's the one thing that scares me, that maybe we've got a deeper correction go here. I got to be honest with you guys. It does scare me when I see people continuing to buy Tesla, continue to buy Nvidia, right? When you are at the bottom of a major correction or crash, no one wants to buy Tesla. No one wants to buy Nvidia. We need to get to that place on those 2 stocks where people say, I don't want any piece of Tesla. I don't want to buy any piece of Nvidia. Screw those stocks. They're horrible. They're trash. Blah, blah, blah. When we get to that place, I feel even better about a bottoming in this correction and not going into a crash. But I don't like I don't like it when people are still buying those stocks heavy. Because I can tell you every crash or correction I've seen, when you're at the bottom of it, people don't want to buy Nvidia and they don't want to buy Tesla. So the fact that people are still willing to, buy the dip and buy the dip, we got to end that. We got to end that. When that ends, then we can talk about really bottoming out things. When everybody says, throws in the towel finally in Tesla, throws in the towel in Nvidia and says, no, what? Screw these stocks. That's when we're really talking.
Any little bit of momentum, people jump on it. And it was probably no coincidence that it was month end, certainly the month end bargain hunting, but also no coincidence that it was a Friday where you had weekly option expiration and, of course, the daily option.
What about the day part? First 2 hours of trading versus last 2 hours. Are you seeing evolution in that kind of behavior?
I don't have clarity into what our customers are doing in that, but what I see in terms of the market behavior, yes. I mean, I think this was the rare morning where we didn't wake up and see futures just grinding higher. Wake up and see them up 5 points and then see them up like 20 or 25 points by the time we get in, or sort of the market opens. And so there's been this grind higher because people are used to it. We didn't see that today because the news was overwhelming. We also sort of see the grind into the close, and that more or less depends on the character of the move. But we do still, even yesterday we saw a big bounce, relatively large bounce into the close because it was the first of the month, and so presumably money flowed in.
I know you've got some thoughts on the VIX, which just hit 25.
Okay.
And whether or not that is a fair measure of fear at the moment or not.
My comment about that is VIX is not a fear gauge, but it plays one on TV. It's not specifically constructed to reflect fear, but of course it does reflect people's perceptions of volatility over the coming 30 days. That's what it's constructed to provide. And so yes, when things are moving around a lot, people then project that they will continue. So, but here when we see VIX around 25, roughly speaking, that's about a 1.5% daily volatility for the coming 30 days. And when we think about the movements we've seen over the past couple of days, when we think about the potential for a government shutdown, frankly, in less than a week and a half, is it wrong to think that we could get 1.5% daily moves on SPX? No. So I think it's not. It is reflecting more caution, not reflecting outright fear.
What about cash levels?
I don't have a ton of clarity into what our customer cash levels are, Sarah. I wish I could tell you.
But so then how do you describe sentiment overall? I know you talked about buying the dip. So is it overall optimistic?
It still remains. Again, when I checked sort of our top 25 list today, it was not just the names that I mentioned. People were buying triple Qs. People were buying SOX L, the triple SOX. There's still this love of leverage, and I think until you see that shaken out, where people are maximizing risk, at least active customers, active traders are maximizing risk. You're going to get this kind of grind back and forth. You haven't seen the full shakeout.
Right.
Yeah.
Kind of like the leveraged home builder, like nail, right? That's been a tough lesson. Steve, thanks. Good to see you.
Thank you.
Appreciate it very
Exactly. That's what you got to get out of this market. You've got to get out all this let's play leverage, let's buy Tesla, let's buy Nvidia. It's hard to get I'm going to be honest with you. I'm completely honest. It's hard to get a bottom until you get people that say, oh, hell no. A leverage ETF on something home building? Oh, no. Oh, Tesla? Oh, no. Oh, Nvidia? No. When that happens, that's going to be, in my opinion, a real, true, washout sentiment, good feeling for a bottoming in the market in general, right? But you got to get that. I don't like all this. People are still buying leverage crap. People are still buying Tesla. No. I like it when everybody says, no, I don't want any piece of any of that stuff. Then we're talking, man. Because that's what you saw in 2022, right? You couldn't find somebody to buy Nvidia stock in 2022. By the end of 2022, no one wanted Nvidia stock. And then a 10x after that, by the way. By the end of 2022, no one wanted freaking Tesla. The stock was $100. No one wanted Meta. No one wanted Netflix. No one wanted Shopify. No one wanted any of the stocks. No one wanted leveraged anything. We had reached, by the end of 2022, we had reached the lowest leverage and margin in the market that we had in many years. So that's what we need to see. Hey, it's Jeremy. I hope you really enjoyed that clip here today. What you looking at in front of you right there? That's the 6-figure Hall of Fame. Do you want to see the next one? That's the 7 six-figure Hall of Fame. Now, that is my private group. Those are members of my private group that have scaled to 6 figures, multi-6 figures, 7 figures, multi-7 figures in their stock market portfolio. They say you are the average of the 5 people you associate with. If you're somebody that is having trouble finding other long-term investors that are focused on building their wealth over the coming years, finding like-minded folks, look no further than my private group. We got a tremendous amount of people. We're consistently talking with each other, learning from each other, researching companies together, sharing news about our different companies, right? We do all that inside my private group. If you would like to apply to join us in there, go down in the description area. There'll be an application down there. You can click on that and you can apply to join us in there and take your game up to a much higher level and associate with the type of folks that you actually want to associate with. Tom Lee.
And Fundstrat Capital CIO, and I can just see you. This is Tom playing out exactly as you said choppy. You said exactly this. You said choppy for how long, but then the S&P again starts moving. And this is not, I don't think, an obvious or a logical conclusion to have right now with all the bad news that we're hearing about these policies. Everybody thinks the market's headed lower.
Yes, but instead we could be bottoming, maybe this week.
Could we be bottoming this week? I think that's a realistic possibility. Obviously, it's no guarantee, but I take you back to what? I take you back to the AI investor sentiment number. You ever see a 60% number, you're likely close to a bottom. That's just like how it's played out. Like you get close, you get that 60% plus number, like bottom's coming very shortly, right? You go look back to 2022, we get those back-to-back 60% numbers of investors bearish on the market the next 6 months, and we literally get a bottom, a few weeks later. You look at the October, was that October 8th, 2008, right? You get that 60% plus number, and guess what? Stock market bottom very shortly after. So the moral of the story is here, he could be right about the market bottoms as early as this week, but you could also say maybe it lasts a few more weeks, right? And then we get the actual bottom, right? But the moral of the story is you're closer rather than further away from that.
And this is the choppiness you were talking about. And, I think you use a combination of fundamentals and technicals, obviously,
yes,
to get things right. And the reason for the choppiness was going to be the first 100 days of this fire hose of executive orders and everything else.
Yeah, that's right. It's kind of weighing on investors' minds. We're seeing it even in the surveys and CEOs because the tariffs and Doge are, the Doge is creating austerity. Tariffs are creating uncertainty. Businesses are maybe sort of sitting on their hands. This is why I think markets have been sort of sinking and momentum has done so poorly. But to me, Friday was a good day because, it was a bad news headline, but markets actually rallied.
Yeah, World War III is usually not a good headline.
Yeah, but to be fair, on Fridays, don't trust the market moves on Fridays a lot. And the reason being is you have a lot of options activity going on. I'm sure throughout the week, a lot of people are buying put options. That can cause, the market to be funky on a Friday where the market bounces back and the market maker has to, offset things. So Fridays are the one day that you got to have trust issues with the market on a Friday.
Yes.
For financial markets or a continuation of very expensive, guns and butter. Mm-hmm. Using guns or using weapons and depleting them and having to rebuild them and everything else might be good, I guess, for the economy. It doesn't seem like a great thing. I'd rather be spending it on AI or something like that. Wouldn't you?
Yeah. I think, or even rebuilding parts of the U.S.
Right, exactly. So from here on out, you think we bottomed? Have we seen the lows already? Because we didn't get worse than, what do we get, 5% on the S&P as far as the drawdown?
Well, I think investors are going to be kind of watching out of the corner of their eye because Friday is the jobs report. Last week, consumption kind of raised concerns that maybe we're slipping into a slower or downshift in speed. So if the jobs report's really weak, there could be some panic.
I would think that it would be, we know about these crack addicts in the equity pit. They want more rate cuts. I would, if it's not too bad, just soft a little bit, and it brings back the prospect of more than 1 or 2 rate cuts, I could see the market rallying on that.
Yes, that's right. I think if the job report is bad and maybe we initially panicked, like even that day, then everyone's going to rethink and realize not only is the Fed put back, because the Fed now will need to cut. But I think that some of the things that look like the White House wants to slow the economy, they don't want to get to stall speed. So then the White House, I think the Trump put comes back. So I think it helps markets.
Isn't the bar very high, though, for Fed rate cuts to be back on the table? I mean, let's say we do have a softer jobs report. I mean, the Fed and many Fed officials have said that the tariff issue they would look through. And so even if tariffs put grit in the economy and we have a softer sort of economic backdrop, that may still not be enough for the Fed to do anything. So that Fed put may not be worth much.
Well, I think it just depends on what the job number looks like. You know, the Fed has not worried about the labor market being inflationary, but they would certainly worry if unemployment's picking up or if we have a negative jobs report. I don't think it's negative, but something, you know, it could be well under 100,000. And if it is, I think the Fed would actually have to get off their hawkish paws.
What is the fundamental and the technical backdrop for bottoming happening this coming week?
Well, you know, I think the best way to define a bottom, and Tom DeMark has mentioned this before, is stocks rise on bad news. And so Friday was maybe the first sign of bad news and markets bottoming. But I know our technician, Mark Newton, doesn't think we're there yet. He wants to see more signs of exhaustion. But we've seen sentiment turn negative. So maybe Friday, you know, but it could have already bottomed too.
So he kind of leaned toward this upcoming Friday being a bottom, right? Which is interesting. So me as a long-term investor, what do I shake out of all that? Like, I'd rather not bottom. I'd rather not bottom. Like, if you had to ask me, would I rather the market bottom this week? No. I'd rather the market go down for the next 3 months straight, 6 months straight. Like, I want stocks for as cheap as possible. As somebody that buys every single week, I want stocks for as cheap as possible. I'm not planning on selling all my stocks and retiring next year or this year or the year after. And so as long as you're not retiring and selling out of your stocks completely, who the F cares? Like, where stocks are, we'd rather have lower in the short term, right? And that's just something that experienced investors understand. Newer investors have trouble understanding that concept. It takes you a little while to like wrap your head around that and be like, oh yeah, like I get it. But like sooner or later you get it.